Hello, Warriors. How you doing, Ingmar? And Paul, how are you, buddy? I know Ryan's here too.
Good early morning, Dale.
And oh, great! And Kman's here, Ryan and Kman. So, dollar extending its gains again today, and I guess the other big story is we were talking about the yen looking like sideways consolidation, and boom, what lit it up, guys?
Yeah, I was up for the BOJ. The possibility was there that they would say something, but Kuroda didn't say absolutely anything, leaving everything the same, didn't even mention the yen, and it just exploded.
Yeah, so people were disappointed that they weren't going to take any measures to stop this move.
Hey, good morning, guys. And and isn't that crazy, K-Man? That was the same thing that we got with
ECB.
The ECB. It's like, how do you not acknowledge? So what are your thoughts, K-Man?
Well, the Bank of Japan repeated that their only aim is to, or their only mandate is price stability, and so they're keeping the interest rates pretty stable. But the rest is, Kuroda is just telling MOF and the government, it's up to you guys. Anyway, it's always MOF who will decide on interventions, but I would have expected some kind of comments, though, looking at the speed of the yen versus other currencies. But we haven't even got a single word from Kuroda. I'm myself a little surprised about it.
And yields far behind, with the yen exploding to new highs, not just making new highs. And
yeah, but that's the thing. They kept their yield curve control completely still, not even changing maturities, nothing. It's to be fair, a little surprising when all the other central banks are moving. They say that their inflation is not going to go above 2%. That's what he said. So he's basically giving a green light, apart from MOF interventions, to be short yen.
Yeah, and the same thing happened with Yuan here today too. So
and the Yuan, that was quite funny, because I was up for the BOJ and then seeing the dollar yuan going right up in sympathy as well. We have to know that PBOC is also in a kind of easing cycle, despite tweaking the FX reserve requirements and etc. But they are not going to raise rates anytime soon either. So finally, dollar CNH is reacting to dollar yen moves.
It's like a volcanic explosion.
Yeah, I must say though, there is, I have a level here at 665 in the dollar CNH. The risk is this thing spirals up, because we are going to have we are entering Golden Week. Japan is off from tomorrow. I think China next week. And what's going to happen? Of course, both MOF and PBOC will be keeping an eye on things. But looking at,
are they going to end some lockdowns to let people enjoy the Golden Week?
No.
Nope.
Or are they limited to
they are just
the rooms?
They are just doing mass. How shall I say? Detection or
concentration camp.
Yeah, well, I'm not sure. I've got a small leftover dollar China left. I'm tempted to take profit here, because I also think that's the last word that I want to say. I also think that what we are seeing now, people are talking about dollar shortage everywhere, but and we are not, and the currencies like the euro and the sterling are not helped by comments either that we had this morning. But I still think we are in end of month territory, and even if this dollar demand continues into tomorrow 4 p.m. London time, I'd be careful to really go blindly long dollars into spikes like we are seeing now. That's my
super dangerous, right?
I'm relatively flat. I've got my euro dollar puts are covered. I've only got like a very small dollar Canada short against the trend line that I have around here. I won't be a hero and cut it if it goes above. But
hey, Kman,
very long
Kman
right now.
Kman.
Yeah.
Let's talk really quick about what's happening tonight, though. I know we're end of month, and first of all, I have to say I have no dollar positions on right now. So I'm just, this is coming from somebody who has $0 on, and I shorted the euro earlier this week, near the, I don't know, 106.25, somewhere around there. Closed it yesterday at like 105. I don't know, 20, 30, 50, somewhere around there. And that was healthy enough on the breakdown. And I don't want to, like, this is from somebody that has no dollar positions on. I want to be long dollars, but we have to be cognizant of the end of month. But the flip side is we have some really big earnings that are happening tonight. And here, Dale, I'll take over from here. Sure. Yes, I'm sorry. What I should be doing is referencing a couple of charts here. So, as we're talking about, like, here's the dollar, and it's breaking out, right? I mean, this is a massive breakout, and we're testing the highs from 2017, the end of 2016, beginning of 2017, January. We're at that 103.80. This is big, right? This is big, and if this is a what you could call it a complex cup and handle pattern. Sorry, it's still 5 o'clock in the morning for me right now. So that means that, we're slightly tilted, right? Just like if you're doing a complex inverted head and shoulder pattern, this is breaking out, and obviously above 103.80 is really breaking out too. And I have to also point out, technicals don't matter. I mean, as much as you would like them to believe, you'd like to believe, when things get gnarly and volatile out in the markets, you kind of have to take your charts and throw them out the window to a certain extent, because there could be massive amounts of dollar demand, not only coming from month end, but let's talk about earnings. I mean, we have Apple tonight. Okay. Apple earnings. Look at where Apple's at. Okay. I was drawing that for one of my guests, so you have to excuse me. We were talking about Apple like a couple months ago. Somebody was really bullish stocks, and I was drawing it out for them. So, but let's get rid of that, and let's just take a look at Apple as a whole. Let me just delete everything. Look at how critical the support is around the 150 level. I mean, this is absolutely critical for Apple. I was doing the trade-off show with Chris Weston, and he was talking about the implied volatility for Apple comes in around 6% today. What that means is the projected volatility of Apple tonight is 6%. So let's just say 6% from current levels. Let's just argue, for argument's sake, let's say we close where we're at right now. 6% lower is here. Okay, you guys all see that? 6% lower would put us here. Okay, let's go to Amazon. I think the implied volatility in Amazon, if I'm not mistaken, is 8%. So here's Amazon. And I think we could all agree that 127 is really, or 127, like this is a currency. And like I even said the right numbers, 2,700 is really critical support here. I think you guys can all see that and agree, right? And we are not very far away from there. So let's say that, argument's sake, let's say we close today right at these levels, wherever we're open, and let's say we drop 8%. Now, if you're looking at, Apple and Amazon, if both stocks fall post earnings, so post earnings, let's say Amazon breaks down, and then post earnings this afternoon, Apple breaks down. Both of them close the day below key support going into month end, and you happen to be short dollars because you're like, well, the dollar's gone too far and I want to sell dollars here. What's the problem when you go into month end where the dollar, but by accounts of, most banks out there are suggesting that we see more dollar demand going into month end. Then you get an issue where equities, with Apple and Amazon both down, let's just say 6 to 8%. And I'm just saying that's maximum. That's maximum, right? But let's just say they do. And we're talking worst case scenarios here. That's going to put the S&P below that support right there. Now we're talking about, the stock market trading down here somewhere going into the next couple of days. And
to the Fed.
And you have end of month, and what you think the Fed's going to give you a put and they're going to come in and save us? Is that what you would think, Dale?
No, I'm saying that into the Fed. That's going to be a real interesting Fed meeting.
Yeah, I mean, look, I don't know. I would be really skeptical about being,
No, there's a Fed call on, not a Fed put anymore.
Okay. Anyway, this is one of those things that did Ryan leave? Oh,
Yeah, you didn't let him talk, so he said, "I'm buggering off. I'm gone."
oh man, why is everybody gone? Stelios went on vacation. Ryan's going
to the football,
Oh, that's the football.
and he has something to say tomorrow.
Oh, okay. All right. Well,
He's living the dream, man.
He is living the
He
dream,
should.
man. You know what? I'll tell you. I will tell you something. If for some weird reason the planets aligned and the Arizona Cardinals ended up going, getting into the playoffs, I do disappear. I would disappear too for the Arizona Cardinals.
You can't.
I get it
because you're the organizer and the head of affairs here, so you can't go anywhere.
No, that's not me. That's Steve, and that's why Steve's here. Steve, how's it going, man? Good morning.
Hey, good morning.
So hey, all these moves in the market. We're just talking about obviously the S&P. We got earnings. We got the dollar. I was, here. I got to show you guys something. This is the ForexAnalytix chat room, and just so you guys can see this, we're talking about positioning in clients. Some people with IG, I think that's IG. Simon's got. Let's see, Mark posted something a little bit earlier about positioning this morning. This is our general chat room. This is Mark. He posted this. I was talking to Chris Weston just because it's fresh in my mind because I talked to him last night. Basically, before I went to bed, and he was just mentioning that 90 some odd % of traders are long euro at his firm. I mean, think about like all the retail traders that are buying or selling dollars, buying the euro. And this, you just talked yesterday, buying the euro at 105.50, buying the cable yesterday. Just we're talking yesterday, not right now. Yesterday at 125. 50, 125.50, 125.80, 126, thinking that, this is the cable can't go any lower. The Kiwi, it's going to hold support. So, I get long the Kiwi at, 65.60. And, the Aussie dollar can't go any lower than, where it's at yesterday. And here we are today, significantly lower. You got a lot of that happening right now, where retail is just stepping in front of the market. So what do you think here? Do you join the retail crowd, Steve?
No.
Or do you stand aside going into month end, since we're having this month end conversation?
No, I've said it multiple times. I don't want to fade the dollar until I see a big reversal. And I think, we've seen that happening multiple times before. The retail crowd is always positioned counter trend. And they're always they're only right at the turn, right? But the fun part is that if you notice how the retail crowd is positioning themselves, they get more and more counter trend as a trend is unfolding.
Yep.
Then of course, those of them that happen to be there when the turn happens are the lucky ones. If of course their entries are not like far away from where we are. And then the fun part is that once the counter trend move starts unfolding, you see quite fast these positions unwind. So basically, we see that the retail crowd is very eager to be counter trend, and then very eager to take profits once they ride. So that's why the vast majority of people do lose money. We know that. That's a fact. That's a statistic, right? Roughly 85% of the people that try to trade, they fail, unfortunately. That's why we're trying here to help people not be in the 85%.
Right.
So as I've said before, do I want to chase this move? No, I think chasing makes no sense, right? There's no risk reward. But on the other hand, should you be trying to fade this move without any technical indication that it's turning? No, I think it's a bad idea.
Yeah, and so let's and Kman, I want to ask your leverage your experience here. Being on the trade desk for decades. Here we are in a month end. Obviously some strong moves, a lot of flows going through. Even ahead of month end. That's the nice thing about nice thing, not so nice. It's actually one of the evolutions of the market. When you know that flow is coming, people aren't just taking it right at the end of the day or at the end of the day or that day. They've been working flows the entire week. So, we don't know how strong that demand is going to be going right into month end tomorrow. How many desks have wrapped it up, but should you be trying to fade the dollar ahead of tomorrow? What do you think?
Well, with the experience on a trading desk in banks, you're not fading or any of these until one or two well-placed hedge funds start to go the other way around, and then they're all going to take profits. But the issue is what we are seeing now, especially doing fresh lows on the euro, fresh lows on the cable, new highs on the dollar yen. I mean, multi years and not historical, but and fresh lows on the commodity currencies. There is the other part, the last part I would say of the market is momentum funds. They will have had triggers, and they get triggers throughout the day, nearly every hour, to go in the direction of the market, and that makes it so difficult to fade. As I was saying in the chat room, and I said it very early here as well, I'm not going to fade much of this. I'm just watching a small trend line in dollar CAD, but as I said, I'm not going to be a hero. I rather buy dollar dips if I have to do anything into tomorrow 4 p.m. because the models were clear with the direction of the equity markets and the bond markets. There should be dollar buying going on, but the direction is less clear for the euro. But I'm actually not going to trade too much into tomorrow. It's okay. You fade it here at 104.80. If the models are right that there is dollar demand still to be done into the end of month, you can find yourself at 103.5, looking at 130 points whole, and as a retail trader, which always hurts. Of course, if you're lucky, you hit the bottom, and then it goes up 50 or 60 points, and you're going to be all happy. But it's just a flip the coin, right?
Yeah, and to be completely fair with everybody just trying to pick the bottom here, these are the types of moves that I'll just look for a false breakdown. You got to let these go, in my opinion, because we don't know where we're going to go. Then we are really just one headline away from the euro trading to parity. Just so you guys know, one headline away. And all it has to do is come from Russia. And we will be down at parity real quick.
Oh yeah, I mean if the crazy guy presses the wrong button, it can.
Yeah, or he runs into another country. He's like, yeah, I'd like to take Poland too. You know, whatever. I'm just throwing scenarios out there. I have no idea what Putin's going to do. I'm just saying that we are that close to really seeing some dollar. Look, the euro's just tripping stops below 104.80 right now. You know, he lows, guys. I mean, you know, this is it. So.
I think for those who want to trade this month end or want to counter trade or would like to counter trade, I'd really watch the clock. Watch the clock come 4 p.m. London time, perhaps today and tomorrow, especially tomorrow. Watch the clock. If you then see failures of broken levels, that may be a much better timing to enter. I think timing is going to be of utmost importance next to levels being broken, failed, etc.
Okay, thanks, Kman. Appreciate it. You know, one of the other things too, you know, just going into this weekend, let's just imagine, you know, we have continued dollar demand going into tomorrow. It doesn't let up because, you know, you have to think about, like, you know, think about this. Like, let's say the dollar continues to break out and we go into Friday, stocks are weaker. You know, going back to our previous scenario, Apple, Amazon, they disappoint. S&P is actually below 4,100. You know, we get some outsized move in equities. Dollar gets additional demand, and you know, we get past month end. The dollar is sitting here at the end of the day on Friday. So let's just say, for argument's sake, let's just say I'm right. You know, for argument's sake, and we close at these levels. If we close at these levels for the week, we are closing in breakout territory. And then, you know, you're going to get continued demand going into early next week. Just demand from people that are like, I'm short dollars and I don't want to be short dollars anymore, or dollars taking off and we're having a little bit of a liquidity squeeze. I need to own more dollars at this point. And so we might even see a continuation going to early next week. So that, you know, I had one of our support folks from you know, our back end support. She said, hey, you know, Blake, you know, somebody had inquired about the trader funding program and said, hey, why can't we hold positions over the weekend? And I was like, you know, it's because, you know, there's too much weekend risk. I mean, you know, people are like, oh, I'm gonna be, this can happen. You know, I'm gonna be long the euro because it can't go any further. And then you hold it over the weekend. Next thing you know, something crazy happens over the weekend, like, you know, Russia makes a move, right? And next thing you know, the euro is trading down at 102, and there's nothing you can do about it. And who's on the hook for that? Well, you know, us that are funding it. So, you know, that's why, you know, over the weekend, there is weekend risk, especially if you go into a weekend with dollar demand so strong. So, you know, we're in an interesting market, and I think you have to be very, very careful at this point.
It reminds me of the end breakout you showed, Blake, a month ago, and you know, it looks stretched on the breakout, and then look at what happened. Yeah, right.
Oh, yeah.
There.
I mean, how many people were like, "Well, we're overbought here"? I mean, look, yeah. I tried to fade the dollar yen a couple of times going into this resistance. A couple of times right into this resistance, I went short, made a little bit of money, and then I went short again as to upper end of it. I got crushed on this breakout. I mean, look, I tried to trade it, but you can't leave yourself exposed over the weekend. You know, you can't. Not in this environment. No way. You know, Steve, I'm sorry, you were going to say something. Go ahead.
Well, I don't know. I was about to say something else now. That speaking of which,
sorry,
I'm going to warn once again. I think what is happening currently with Japan is going to have a very bad ending. The combination of global inflation skyrocketing and fastly depreciating currency, and the commitment from the BOJ to be practically at some point the only buyer, I think we have all the ingredients of a very, very explosive mix there.
Yeah, well, you know, can you say Plaza Accord 2.0? I mean, you know, hey, Kman.
Yes, sir.
Could we have like do you think we are getting to that point? I don't think we're anywhere close to it, just for the record. But do you think we're anywhere, close to a point where central banks have to get together and really discuss dollar strength and how it's affecting the world inflation wise? I mean,
no, I don't think we are close right now. For me now, the only ones in that corner are Bank of Japan, but they said, MOF, but they said that they would talk to authorities and the Fed because they don't want to be seen as a manipulator, to justify unrealistic moves and to intervene if they have to intervene. But Lagarde, over the last meeting or the last speech that she was asked about FX, and she says, yeah, we're looking at the euro, we're like you, we're looking at the euro move, but it's not really our concern right now. So I don't think there are big discrepancies or big misalignments of currencies right now, not big enough to warrant any concerted intervention.
Right, but dollar yen at 300 would be something, right?
No, it's not. I mean, everybody was laughing with me when I said when was it, back in January or so, when I showed this big wedge and I said the target is 155.
Yeah, let's talk about that for a second. I mean, let me find some long-term data of the dollar yen. Here we go.
Yeah, well,
I knew IDC would have that data.
Do that.
If you guys think the dollar yen's never been to 300, some of you don't remember, right? So some of you guys don't remember the 70s. I was just a little wee pumpkin back in the 70s. However, the Plaza Accord was back here.
80, 85, yeah.
So just
I remember it very well.
Yeah. So
I was already trading then.
So Kman, let's talk about you not being crazy. I mean,
let's talk
about a monthly chart, guys, just so you guys can all see this, right? And I know a lot of you are like, well, oh gosh, it's not going to break above 130. Look, I now that the Bank of Japan said I don't give a shit. I mean, they are, and I was listening to a really interesting interview where the person was like, dude, they're, the Bank of Japan really, they can't defend their currency and their bond market at the same time. They really are worried more about their bond market right now. They're going to have to let their currency go a little bit. It's going. So you start to think about what these measured moves on a monthly basis are. I mean, look, is 150 that crazy, Kman?
No, it is not, and the where I would like to send a last warning into the retail market is trends. Currencies have been moving for 20, 25, 30, 40% over time. So even major currencies. So it's dangerous when a trend develops, like the one which really developed from 110. When the Fed really started to change tone. I said it in May, June last year. I said I sense a change of tone in the Fed. I want to be long dollar yen because the Bank of Japan is never going to change anything. It did move now nearly 20% since then. Those moves are realistic in the longer term. So for retail traders, and Steve said exactly 100% right. As a retail trader, of what I saw since I entered this market, is a counter trader, and it's very dangerous in trends to counter trade. It is very dangerous because you exhaust your account.
Yeah, because 80% of the time we are range bound, so it's easy to chip around and do that. But when a trend develops, that 20% of the time you get that breakout.
Yeah, and your account gets absolutely hosed.
Because you fade the dollar yen, all the way into.
There is something else that is super dangerous. A very, very, very big part of the people that trade at the moment have gotten used to an environment where monetary policy acted for multiple years as a sedative to the creation of any big trends.
Yeah.
Now that this is going away, we're likely seeing not only, as we've said before, volatility pick up in risk assets, but along with them in currencies as well. So we're entering a period where we're likely to have big sustained moves, and there is a big generation.
Wait, guys,
of people.
I'm sorry, Steve. I hate to interrupt. It's GDP data is coming out.
Yeah.
Crap. No one actually. You guys did not get my attention here.
Very bad.
GDP today? I'm sorry. It's just,
1.4.
I'm sorry. I thought it was GDP today. It
Hey,
was,
it's coming out. Yeah, it is. GDP minus 1.4. Where
minus 1.4. Uh-oh. Wow. That is I didn't have it up here.
There you go.
I'd watch out for risk a little
Expected was positive 1%.
Yeah, expected was positive 1%. Holy cow. Sorry, guys. I Steve, you just got off on a tangent. And I realized that we had.
Yeah, absolutely. I mean,
and you know what's going to happen is you're going to see these commodity currencies get absolutely smoked here. I think. You know, the Aussie, gets a little bit of a bounce because it's just some weak dollar data, but they're going to get hit on the crosses. So
you know what else might happen, Blake, right?
Well, hold on. But you know what you got to start looking at this Euro Aussie. This is one that's respected. A nice little channel, 38% retracement. We get above. You guys want to play the Euro long? Play it against a cross. You know, these crosses look a lot more constructive, right? We're holding key levels on, Euro Aussie, Euro New Zealand, if you want to play those higher. What were you going to say, Steve?
So to finish the point I made before and then to make a comment about the GDP. So my point is that given this new environment, the tendency of retail traders to fade a trend with them getting used to being no strong trends. So sometimes even when they were early and wrong, they could just stick with it and sometimes make it work. I think it's going to blow up a lot of accounts. Right.
Oh, of course. Yeah, of course it will. Yeah.
Now having to do with GDP data, it's going to be interesting to see how the market.
We have a guest, by the way.
Oh, okay. Yeah.
We have a guest, right, Dale?
Yes, sir.
Yeah, we have a guest. So
okay,
a great guest.
Okay. Then the rest
we'll continue this conversation
on the morning edge.
We'll continue this conversation on the morning edge.
Yes.
Which is in about 45 minutes if you're a ForexAnalytix subscriber. So I'm gonna leave it with this. If you haven't checked out ForexAnalytix, make sure you do so. We have one of the most active communities in the markets. You can see this is our chat room. Kman was just chatting with us, and now he's already back in the chat room post data. This is just in the last, just so you can see, this is the general chat room, and I got up an hour ago, right here. Oh no, I was posting charts. So right somewhere around here. So anyway, even further than that. So, and it still goes. This was from an hour and a half ago. There we go. There's me. You see everything that's happened just in the general chat room. That's not the trades room. That's not the macro flownomics room. That's not you can see how active our community is. We don't talk politics. We don't talk religion. We just talk markets. So jump in our chat room. One way to get involved is to join the Trader Funding Program. That's how you can access larger accounts. You have to take an assessment. We have people that have passed these in a demo environment and have gone into live trading accounts over the last couple of months. So come join us. We'll see you there. Dale, it's all yours. Sorry.
Hey, Chris, welcome back to F.A.C.E. How are you, buddy? I've really been looking forward to speaking to you for quite some time. I think the last time we talked, there was an eclipse happening. How are you today, Chris?
I'm well. Can you hear me?
Got you now, Chris. Welcome.
Okay, good. Thanks.
All right. So was there anything you wanted to share on your screen today, or you just wanted?
Yeah, there's here. Actually, I think
the share screen. So
okay.
Those of you that don't know Chris Carolyn, his handles the Spiral Calendar. He's the winner of the Charles H. Dow Award for his book on lunar cycles. And Chris has some interesting things to say about what's coming up here on the weekend, and I was influenced by you, Chris, with your writings back in the 70s and 80s to start paying attention to these lunar cycles. So it's your responsibility that people call me a lunatic.
Well, I hope maybe at the end of the day that'll be an honorific.
So, and your tweet was very interesting. I wasn't aware of the eclipse coming up this weekend, but your tweet said financial panics are eclipse cycles midlife crisis. So we've gone through this before, and this could be a repeat. Is that the implication?
Well, there was a head fake in that tweet because the midlife crisis isn't this eclipse; it's next year. But I want to talk about both eclipses, and before I do, though, I thought, and a good segue from the conversation you were having about the Japanese yen and what's going on these days, because I look at the market. There's two things I'm interested in: liquidity and sentiment. So the eclipses will be the sentiment discussion, but let's just touch on liquidity a minute because it's what's pushing everything around. A couple of years ago, I was just kind of confused because you hear people say, well, the lower dollar is bullish for stocks. But then at the same time, they would say that, the dollar rising against the yen is bullish for stocks. So I would ask, well, what is it? Are we rooting for a higher dollar or a lower dollar? Well, why not net out the two components? Take the move in the yen and subtract the move in the dollar index and see where we're at. And that's what I call the FX weather vane. And those are the daily bars. You can do it intraday. And to me, it's just a good measure of liquidity. And you can see things were very tight. I run a 7 calendar day moving average on it. Things were tight in February when stocks were getting crushed. And then as soon as the yen collapse happened, the indicator goes wildly bullish and we see stocks respond. And now more craziness, some very negative readings earlier in the week. And then today with the yen just getting hammered, once again, liquidity flows in and things look good. So, I just did this by eyeball, but David Aronson, who's written a couple of books on technical analysis, he ran this through its paces and kind of came back and said, this is a hell of an indicator. So it's
and you also I started following the yuan after our last interview because you were talking about correlations. Were you surprised that the yen led it, and then all of a sudden we had this explosion in USD yuan? And it looks like
the Chinese have to preserve their export markets. I mean, it looks like now everybody's looking at the yen and saying we have to do the same thing and not lose our exports. So, this is going to come to a head, and your previous commenters are just so right on the money that people are going to get carried out if they're not careful with these massive moves. But I mean, it looks like the market's going to force the Japanese, to back down, and it was exactly right. It's bonds or currency. Which market do they want to save? Well, they're going to have to make the decision to save their currency, and the market's going to force them to it. But at what level? I don't know. 140, 150, who knows?
Yeah, so now the U.S. exporters, you're starting to hear, how they're taking a hit to earnings because of the strong dollar. And,
there will be no winners. There will be no winners.
Okay.
All right, let's move on to sentiment here and eclipses and things. I published this chart 30 years ago in the book.
Yeah.
And it's forecasting a major event next year. Now, when I don't stick by this forecast anymore because it was looking for a top in June of 23. And anybody who's read the spiral calendar knows the original observation of why 29 and 87 were so similar is that the distance in time is the square root of a Fibonacci number, the 29th number in the series. And it's precise, literally within hours. So at this time, I thought, okay, we have this relationship, and they are then looking at a spiral relationship out in June 23, top to top. But what I figured out since, in 30 years, is that the important relationship is crash to crash, not top to top. So here's the revised forecast, measuring from the two crash lows, which gives you August of next year, third week, roughly.
Okay.
Now, what's really interesting here in the 30 years is that I found what the sort of the connection that drives these, and that's eclipse cycles. So let's do a quick primer on eclipses. And, you know, Saros, very similar eclipses happen every 18 years, and that's called a Saros cycle. And, you know, we think of cycles as being infinite, but they're not. Cycles have beginning and they have endings, they have midpoints. And in the case of a Saros, the very first eclipses are partial eclipses, and then they begin to graze the poles. And in the middle of their lifespan, they're hitting the center of the Earth, and then they proceed up to the other pole. And half of the Saros cycles go south to north, the other go north to south. So we could plot. So here are all the eclipse cycles plotted by their series number. And so you can see any specific Saros cycle here. It starts around 400 AD, and it's going to go for over 1,000 years. And in the middle, those shadows are going to be crossing the center of the Earth. So let's zoom in and see where these years of those panics. Oh, let me just give you a little terminology here.
Okay.
Eclipse gamma, that is just a number that tells you where the shadow falls on the Earth. So a gamma of 0 is a central eclipse. This started 20 plus years ago in an email exchange with Arch Crawford. And he said, the certain eclipse is important because Pluto is doing a headstand that day, that type of thing. And I said, well, no, if eclipses matter, it's the ones that are most perfectly aligned that should be the important ones. And the other number here to watch, the INEX, that is the average time distance between Saros cycles. So similar Saroses have adjacent Saros have similar eclipses. All right, here's the meat of the matter. That same chart now zoomed in, each of these dots is an eclipse. This was the eclipse close to the crash of 1987. 58 years earlier was 29.
Right.
36 years, 58 years is 2 times the INEX because it jumps up from, and now this is 36 years, gives you the panic of July of 1893. Another 36 brings you to the October 1857, the massive global crash.
Yeah.
There was a panic
War
in Hamburg, Germany in October 1799. So this relationship, 58 years, October to October, that's repeated exactly in the 20th century. You can go 36 years here, and there was a panic on the European continent in September 1763. But actually what you see is these eclipse cycles, after they pass their midpoint, these triangles are the center eclipse, literally the ones passing the center of the shadow. Those seem to generate this issue. Now, the specifics of the measurements are in the market. They follow the spiral calendar, not the eclipse. So in other words,
right.
It's exact in the 58 year, but for the 36 year, the spiral calendar is 3 months shorter. So, next year, the eclipse is due in the fall, but the low should come in August. I don't think it's going to be a crash. And like 1893, crashes are an October event. And, but when they happen in the summer, it's a different look to it. And that's what 1893 was.
Right, whereas it's just more of a persistent decline rather than compressed in a few days.
Yeah, something like 1907. I mean, the top could very well be in place, most likely is, although not in yen terms.
Right.
And so I'm thinking we've got this grinding bear market back and forth,
Right.
ridiculous, and an eventual bottom in August of 23. Okay, now here's the same, all the eclipses of 2100 years plotted by their gamma numbers. And you can see that there are obvious cycles in here. And but now let's just look at those three Saros series where all those panics resided on. And here, 130, 132, 134. The odd numbered Saros are the ones moving from north to south. These are south to north. So here you can see after the zero on 130, you get panic, 36 years panic. Then it jumps to the next Saros, that's 58 years. Then 36, then 36, then 58. Now 36 brings us to the 2023.
Okay.
It's fascinating to me that these are all, something that's wondered scientists, how come all the civilizations in the world formed near the 30th parallel? And they'll always tell you it's about climate and growth and whatever. But I got to think that there's something else in latitudes in human development, but that's speculation. So,
well, what do you think it is? Why do you think that is?
Oh, I mean, we are children of gravity. I mean, this is getting to who we are. I think life is, our parents are Father Time and Mother Gravity. We're what they drew on this. We're the pattern.
Okay.
All right. Now let's talk about today's eclipse or this weekend's eclipse. I've done work in the last few years with tides and short term and using the tides to measure emotions. So we're going to look at a series of charts showing the short term tides at each of these somewhat panicky type lows of the last couple of years. So let's run through them. Now I have my tidal data I get from the aeronautics website, but I transform it into the two daily tides. There's two tides each day. So
right.
What we're looking
high
at
and low.
Pardon me?
High and low tide.
Right. So, but what we're looking at is the drop in feet of each of the day's tides. So down here, these numbers are large swings in tides, and the top are the smaller swings, high to low. So these are the full moons and new moon, spring tides. These are neap tides up top. What you see here on the 18 low was the price, bottomed at the tidal extreme, turned around.
Interesting.
Here's the March.
That's when Paul flipped and sang Kumbaya with Bernanke and Yellen.
Yeah.
Okay.
Now here's the March 20 low. Now this was interesting because the actual VIX low, the VIX extreme was about a week before or well ahead of the price low. It didn't really, and that's almost maybe what we're seeing right here. Here's the October 20 low, right in at the. Here's September 20. It was really a double bottom, tidal extreme, tidal extreme. And this was last December, which was an eclipse. The eclipse was on the weekend, and we make a price low, and then we got a retest on Friday, and then off to the races. And that brings us to here. And what I had said on my website update Sunday was looking for a bottom Thursday or Friday. Given the yen, we may be already done here. Although we still could get another washout in climax, but that's where we're at with this eclipse. And
okay,
so this is not we can go back, and I could show you. So yeah, this weekend's eclipse is down here. This dot down here. This is and it's going to graze the South Pole. So, all right, that's my sentiment story. What else do you want to talk about?
All right. Well, really interesting, Chris. That I'm going to have to watch this again to absorb it all. And when you use the tides and the spiral calendar in conjunction, is it giving you any kind of tell in the big picture of rates here? Is this a major turn in the cycle? The end of, it looks like we're almost having a sovereign debt crisis here. Do you have a view on yields and rates and the Fed based upon your work?
Well, I mean, the big view was the forecast made in January of 20 that March would be the end of the bull market in bonds, and the spiral calendar was looking for March 30, and it was March 9th. But so the bonds
Close
are
enough
done.
for government work.
Yeah, and so I don't have short term here is I don't see. I mean, we're almost. The central banks are kind of driving the bus here, I think, in terms of timing. It's going to be about when they break and when they panic, et cetera.
And anything, the whole world fell in love with commodities. They've been well rewarded with energy and miners, and the gold, the miners came apart last week. Wondering what your view is on dollar hedges like gold that you probably don't need when the dollar's doing what it's doing. But do you see any kind of point where people need to diversify out of the dollar?
Well, yeah, let me see if I can get a, not sure how to change what screen I'm sharing.
Oh, you stop the share and then start the share.
Now we're going to see where I'm going. Okay.
Okay.
Yeah. What are you seeing now?
I'm still seeing the tides chart.
Okay.
All right. So
yeah, I have two machines.
Now you have your screen up.
Transfer over to the other, but I guess I can't do that.
Yeah, you have your screen up now, and I see the gold right there, and right in the middle. So we have it. We have
all
it
right.
now.
Well, yeah, this is gold inverted versus dollar yen.
Right.
And here, let me move it up.
To enlarge it. Okay.
And here, this explains why gold can go down while we have inflation, because the inflation is all in the yen collapse.
Right.
These can still get wider while gold falls and have inflation. So this strong dollar is makes it harder for U.S. participants to essentially play the inflation. Literally outside my window right now, there are 7 houses under construction within 300 yards of me. What are going to be the mortgage rates when they try to sell those? Nobody knows. Very interesting. I mean, there's so much uncertainty now.
Right. Well, you never know if you have faith till you need it.
Exactly. Well said, Dale.
And in your work, and not just in life. And what an excellent tutorial for people that are interested in this type of analysis, Chris. I think you're best of breed, as they say in the business, when it comes to astronomical type analysis and tidal, and you've inspired a lot of people over the years to look at things besides just candlesticks and see that the universe has a rhythm, and whoever created it was a mathematician. So I really enjoyed today, Chris, and for people that want to follow you, I know on Twitter, they could follow you at the Spiral Calendar.
At Spiral Cal, and my website is spiralcalendar.com. Yeah, just a little background. My website, I offer technical analysis, and it's not a trading service, and there are lots of those out there. I'm just original technical analysis work you won't find anywhere else. And it's a value to some people. It's not for others. It's not for everybody. But I always have an original perspective.
Okay, so from original perspective to a lot of cycles that you've lived through and all the research you've done, give Chris a look, and it'll broaden your perspective, because Chris looks at the markets. Although he can break out a microscope, the guy uses a telescope. In fact, it's like the Hubble. So thank you, Chris, for taking time out of your day and educating our community about things that are unconventional.
You're very welcome, Dale, and thank you very much.
All right, everyone. Chris Carolyn, check him out. And I think you're going to be paying attention to August of next year. Mark your calendar. Thank you, Chris. Let's do it again and not wait for another eclipse. Okay,
sounds
Chris.
Good.
All right. So that's a wrap, everyone. Good hunting. Remember, don't just count your pips, count your blessings. You could join the team in 20 minutes on the Morning Edge. Hope you enjoyed Chris. I know I did. Good luck, everyone. Adios.